the hotel industry is going through what could be called as boom time. But after the government push where suddenly 1 lakh crore will come back into the hand of taxpayer, could good become great and can great become excellent? So Indians now are suddenly feeling on top of the moon, all taxpayers, including me and my guest Mr. Chhatwal, that we'll have more to spend. So the point what we want to understand is for the Indian hotel or for the hotel sector per se, this 1 lakh crore which comes in. Is this good news, great news, or more like a windfall?
I think it's very good news. Firstly, it's a good news for the people. It's good news for a section of the society that they have more money in their pockets. And if from that, a fraction of it comes to hotel and food and beverage spaces, is very obvious and very good.
If one works with a very big assumption that the tax cut could increase your in hand from anywhere between 5,000 to 8,000 on an average, we are looking about 70 to 80,000 coming in hand of a taxpayer. Now, you cannot buy a flat because of it. You really cannot buy a large luxury car, but it will, in a sense, propel low ticket items, perhaps staycations, perhaps more vacations, and perhaps more QSR and restaurant spends. Is the logic in thinking like that?
Absolutely, a lot of this will happen, should happen. As you rightly say, the money is not so much that is going to change your lifestyle completely, but definitely you can satisfy your wanderlust, and you can go and try things which you were maybe hesitant in doing so. And I think it's a very, very good boost to the consumption sector. And I personally believe that a part of the hospitality and food and beverage space is an integral part of consumption sector today and not discretionary, what it used to be maybe 10, 20 years ago.
But the entire hotel sector is going through, I won't use the word boom time, but it is going through interesting and encouraging time. Can this encouragement, because of this kind of a government push, translate into boom?
Well, this is one of the important factors, but for me the most important factor has been the infrastructure spend that the government has incurred in the previous years. The Udan scheme, the Mudra scheme, the Prasad scheme, and all these culminate into a big opportunity for the sector, and definitely this should give the boost to the sector that is needed, because if you have new airports, then people will fly. If there are 1,200 new planes coming into India, they're not coming here to get parked. It is going to improve the connectivity. So the infra RCS is really going to be a very important part of the growth of this sector.
Okay. Now let's talk about Indian hotel. Your portfolio starts with luxury, then it really moves into middle market, then where we are standing, Ginger. This is affordable, good. I mean, how would you classify Ginger? Affordable luxury or entry level at a good price?
It's just absolute phenomenal value for money in great locations and absolutely clean product, ready to compete anywhere in the world. We are India centric, but this product you can actually lift it and place it anywhere in the world, would work as wonderfully as it works here.
Okay, so let's affordable entry level hotel where the average rates are anywhere between 5,000 to 8,000 per room night.
That's correct.
Can I say the biggest delta for the industry and for the hotel sector would be felt in this particular brand, which is the Ginger brand?
Absolutely, also for us. So if you look at our standalone average rates, which include one or the other Ginger, is around 20,000, and the average for Ginger is around 5,000. So this would be an absolute entry level versus a Vivanta or a Gateway or a Selections or even the newly launched Tree of Life.
Okay, I can see there is a new truck here. So what, this is the first one from Taj. आपने कुछ भी नहीं छोड़ा है, राइट? और फूड ट्रक में भी आ गए.
देखिए, फूड ट्रक हमने शुरू किए थे कोविड के टाइम पे.
Right, right.
And it was a few trucks that we did in very big centers, whether they belong to SAP or they belong to TCS or for children's parties, etc. This is very normal in the Western world, and I think it's been doing very well. It's not the truck and the sales, but when this is moved on the road, the number of people that see the signage on it and the impact that it has is maybe one of the best forms of marketing.
So next time there's an office party, we can call the human truck.
Please, we will even give you a special rate.
The other aspect is that what could be the impact of this in smaller towns? Because taxpayers are there everywhere. So one is that in terms of the delta would be perhaps felt, let's say, in a brand like Ginger. What about smaller towns? Do you see the progress they're changing?
Ginger as a brand or this kind of positioning of
there's a coffee
hotels is absolutely ideal for any district capital in India.
Okay.
So there are almost 700 plus district capitals. So over long term, I think let's say next 10 to 20 years, you can easily have 700 to 1,000 Ginger branded hotels in India.
Okay, how
it's
many
a segment that nobody ever thought.
How many hotels do you have right now?
We have a portfolio of over 100 and over 70 are in operation. And more importantly, we are doing now big box Gingers. So this hotel is 371 rooms. We opened just post Christmas the Ginger in North Goa, which is 260 rooms. We are opening 350 room Ginger property at Bangalore Airport with Bangalore International Airport Limited. Actually, it's a combo hotel with another 400 rooms in Vivanta. So total 750 plus 400 as Taj takes to 1150 and another gateway of 200. So almost 1,300 rooms at the Bangalore Airport. But it is one of the most beautiful airports in the world. And that's what I meant when I said the investment in infrastructure, whether coming through private capex or coming through government capex, has actually changed the landscape. So the old metrics don't work the same way. You can't say, well, this is cyclical. Well, at the moment, demand is outpacing supply. What will happen when the next... There will always be a next boom and a next doom that will come. But your infrastructure does not go away. So the foundation is strong.
In the budget, there was a specific mention of spiritual destination. There was specific mention towards tourism. Is that good enough to reignite a lot of things in the sector?
I think, first of all, we have to be gracious and thankful that the kind of mention tourism got, I have not seen it in my 7 years before. So I think that is the starting point. The most important point that the Honorable Finance Minister said in her speech was in collaboration with the state governments, because the land is going to come from the states. So I think getting the land, the permissions, and if it is coupled with those 50 new destinations with infrastructure status, then it will really accelerate the pace of hotel development in these new destinations. Not everybody is, sitting on a cash reserve. So the sector is labor intensive and capital intensive, and the infra status enables some form of moratoriums, a longer payback period for the property, and a cheaper interest maybe by 100 basis points or so. But at the same time, many states have come forward and done the industry status at the state level, but more than half have still not done it, and we would always keep pushing for that in every state, because, as I said, this is not luxury. We're talking about mid-scale, upper mid-scale, upscale, and that will really help in the growth of the sector, growth of the GDP, growth of the jobs, direct and indirect. So this is absolutely a great potential that India is sitting on, which is waiting to get tapped. The start has been made with this budget, and hopefully we'll keep evolving it over the next few years into something which is really lasting and meaningful, both for the nation as well as for the sector.
So let's address from a stock market side. When the budget came out, hotel stocks, hospitality stocks, QSR, anything and everything which has got to be discretionary spend that went through the roof. So markets are assuming that this budget will have a multiplier effect, both in terms of demand and also in terms of profitability. Is that assumption by and large incorrect or correct?
I would say that the tax reform is for the hotel sector a little bit cherry on the cake. The demand is outpacing supply. There is no way that supply is going to catch up, at least in the next 3-4 quarters, with the demand. My personal view is the next 10 quarters, demand will continue to outpace supply
Next
by
10 quarters.
next 10 quarters by 300-400 basis points.
This is your
Because
pre-budget view or post-budget view?
pre-budget view.
Okay.
And
Now
with that, now
post-budget
we got this a boost through the consumption. The reason is very simple, Nikunj. I've mentioned it many times. The change in the infrastructure. Today we have a Bharat Mandapam. It can hold an event from 3,000 to 5,000 people. Same is Yashobhumi. Same is, a very large center in Mumbai with Jio. So in these cities, nothing has come up really in terms of new supply in the heart of the city. Maybe in the suburbs, Navi Mumbai, for example, or maybe in Noida. But Lutyens Delhi still has those very famous, iconic hotels which were there 10 years ago, which were there 5 years ago, and which are there today. So your proximity to Pragati Maidan or to Dwarka is really ideal from, SP Marg, or from that heart of Delhi, from the what you call the diplomatic area. And that is not going to change because the connectivity is also through the metro. So I remember when the German Chancellor was there, we created one evening in Yashobhumi where we took everyone with the metro to Yashobhumi. So I think this kind of a change with the possibility of doing an event for 1,000, 2,000, 3,000, 5,000 people in an evening, and if 10% or 20% of them need rooms, your Delhi is full. If there is an event happening in Jio, then Mumbai within 5 square kilometers of Jio is also full. If there is a Coldplay happening in D.Y. Patil, then everything around Navi Mumbai is full. Maybe it's only 2 days or so, but you get a lot of good basis for occupancy, for rates, which help you sail through. And this is not going to change in the short term, in my opinion. So I think that one big factor of demand outpacing supply, especially in new destinations. I mean, as we speak, Mahakumbh is going on. How do you get rooms in Mahakumbh? I get so many requests every day.
Everyone is staying in tent, where?
Everyone is staying in tents, right? So how do you get to that kind of supply overnight? So I think this is also not possible, not just in India, it's not possible anywhere in the world. And with this new, I would say, revolution, not evolution, almost revolution in spiritual travel, I don't think anybody has seen that before. We are doubling the size of Taj Ganges, adding a 100-room block. We increased the size of Nadesar Palace also in Banaras to the extent possible. We have opened a second hotel in Tirupati. We have opened a second hotel in Katra. We just opened a new hotel in Puri, in Jagannath Puri. We always were in, Meenakshi temple with Madurai.
Mr. Chhatwal, while there is merit in connecting the dots and say, okay, experiential tourism, spiritual tourism, staycations, all of them are growing. But for big hotel chains, business travel is also good. And economy is slowing down. Profit, the base effect has kicked in. That could affect business. That could affect business travel. Is this something which could equalize? Business travel goes down and the experiential travel and spiritual travel goes up?
Well, I have to say that within the sector, but also within our company, we have not really seen this slowdown. Maybe it is because of the demand outpacing the supply. But even if it should slow down, most of the companies have gone through COVID. They know how to control the costs because we worked with zero revenue for so many months, right? And 3 waves of COVID. Number 2 is very important for each company to assess their not like for like growth. We have very strong pipeline. Almost 50% of our hotels in operation are also in the pipeline. So we have a pipeline of 120 plus hotels with openings at 20 to 30 hotels going forward as of this calendar year or as of next financial year. Now when you're opening 2 to 3 hotels a month on a capital light model, it should easily be able to absorb any headwinds that might come your way, coupled with the cost optimization that industry was able to embrace during the COVID time. So I'm all in all very relaxed about any kind of slowdown that may come. It will come. It's not that it will always keep going up in a straight line, but question is for how long? 3 months, 6 months, 9 months? We are very, very, very well positioned, both as a sector as well as a company, to mitigate and manage through that kind of situation should that ever arise.
Okay, now Indian Hotel has a template, which is asset light template, which pretty much is been customized to fit on the different categories of the hotel. So Taj has a different kind of an asset light model, Ginger has a different kind of an asset model, Vivanta has a different kind of an asset model. What is stopping you from taking this model, which is a higher margin, a very efficient model, into other countries? Because looking at the scale and the experience what we have now, you can easily take this asset light model to other countries and perhaps expand there aggressively.
See, there are three critical reasons for it. Number one, if India is the fastest growing among the major economies and there is so much to do here, why should I take the capital from here to some other country in the world and put it there, which is not our home market? We are most familiar with our home market and we have so much more to do. So that's one, and that is the guidance we have had from our board, and that is my own personal view also, that that is the right thing to do. Number two, when it comes to Taj, we are not slowing down with Taj. We will keep doing a couple of Taj branded properties every year on the international arena. Number three is my personal view that your certain brands in mid-scale and lower mid-scale are meant for domestic markets. Up till now, with the exception of maybe, let's put it this way, American brands, nobody has actually achieved, and it's also questionable how much other brands have achieved, because the wealth creation that is happening, the value creation or the wealth creation in each of those companies, to the best of my knowledge, and I've worked internationally for 3 decades, actually happens in your home market. The rest is getting dots on the map, which you expect at some time to blossom, but that blossoming has not really happened to that level. So I think all in all, at the moment, we are in a very good position. We have the sweet spot of benefiting with the Taj brand internationally, Taj brand domestically, and the rest of the brandscape with a very strong growth platform on, I would call it the Indian subcontinent, and anything which is in a flying distance of 2 to 3 hours from major cities of India.
Okay, so I'll wrap it up with just 2 more questions. Now, for Taj to move its needle, I'm talking about not Taj, but for Indian hotels to move its needle, how much experimentation are we likely to see? Cumin is an experiment. Ama is an experiment. I would say Ginger at some point in time was an experiment. What could move the needle for Indian hotel in next 3 years by at least 10%?
Well, I hope the figure is larger than 10%. 10% would mean only 3% per annum. I don't know, you mean
10%, I'm just saying something new, something new which right now is not there, but it suddenly from experiment becomes a mainstay and you will say, "Arey, chota tha itna bada ho gaya."
So we have 3 or 4 opportunities which we have launched in the last 2-3 years. One which we have not yet announced, so we'll do it with you at a later date. It should happen by end of March in luxury segment. But what we have done is in the homestay with Ama, with Cumin, and we call it the Cuminization of Ginger, because every Ginger is having all-day dining in terms of Cumin, and Tree of Life, which we just acquired in the middle of Jan, the 55% stake in the Tree of Life brand. So if we can scale up these brands very fast, we not only create a 10% impact, we can create 30-40% impact, because the guidance that we have given is that our new businesses, all these are part of new businesses, will grow anything north of 30.
Yes.
And the current trend is more in the direction of 38 to 40.
Okay.
So 38 to 40% compounded annual growth on the top line is something which is like wonderful, because we have been doing this on a capital light model. So maybe we have some operating leases with revenue share, but we have not actually invested any capital in these brands. So I think this is the beauty. If this journey continues for the next 3-4 years, then we are talking about at least a 30% and not 10% growth. And I remain, I would say, very optimistic. I won't use the word cautiously optimistic, that this kind of positioning is crisis resistant. No matter what slowdown may come, at certain price point, it's just a very compelling proposition. So, and most of these brands are in that price point, and hopefully they will become a significant part of contributing value. When I say significant part, what we have guided is with all these businesses together with TajSATS, 25% of the total, which was like 90% dependent on just Taj.
Okay, so I'll wrap it up with a very basic thumb rule, which is that if the nominal GDP in India, and I'm simplifying it for our viewers, which is 7% GDP growth, 4 to 5% inflation, nominal GDP, budget also is estimating 10% plus. So can I say at the current juncture, looking at where you stand, which is IHCL, and where the industry stands, the growth of the hotel industry, of the good big brands, should be at least double that of nominal GDP for next 3 years? 20% growth broadly.
20% is a very ambitious number from like-for-like portfolio. I think because we are coming from a large, base which has really evolved very well in the last 3 years. So on a like-for-like, if you were able to achieve 10, you're doing very well. If you do 11 or 12, you're doing exceptionally well. Important is, as I said, you're not like-for-like growth, because in an ideal world, if 60% of your operating leverage and your top line is coming, or the top line growth is coming through existing, and 30 to 40% from the new, but the new businesses or new hotel openings, then you are in a very, very good space.
Well, Mr. Chhatwal, I would say that every time you meet a hotelier, you would say 3 cheers. And this budget is actually clearly 3 cheers for the sector per se. It's been such a great going for the hotel industry, for IHCL, is that when you look back and you say, "Arey, ye sapna ya hakikat hai." I think this is reality, but you think the sapna chalta rahega.
नहीं, सपना नहीं है, बट जैसा है ये सिलसिला वैसे ही चलता रहे तो अच्छा है.
So nightmare का भी स्कोप नहीं है.
नाइटमेयर तो हमारे साथ, हमारा सेक्टर ही ऐसा है, कुछ ना कुछ हमारे होटल्स में होता रहता है, which is, that firefighting is needed on a daily basis. So we are pretty used to that kind of a bumpy ride. But as long as it's not on the macroeconomics, as long as it's not related to top line and bottom line, I think that's fine.
Well, I appreciate your time. And, I sometimes get speechless to really capture the real story of IHCL from brink of existential crisis to revival and flourish, and now great going. So just congratulations once again, and thank you for joining us.
Thank you.
Thank you very much.
Always a pleasure.